everyone, how are you? It's Leah Cost with the Mortgage Center. And for many first-time home buyers, they ask me, what is it that the banks are looking for when they're processing my application? When you ask me what my credit is, or when you ask me what my income is that good or is that bad? What kind of bars and hoops do I have to jump through and over in order to get a mortgage from a bank at a good rate? Well, there's 5 main criteria that banks look at when they're doing a mortgage. So I want to go through each of those 5 aspects and let you know what it is that they're looking for. But however, I will prelude this discussion with each bank goes after different clients, much like Lexus goes after different ones than Toyota. Same with banks. Banks have boxes that you need to fit within, and that box is not going to fit everybody. And for some people, they're squeezing in, which means they're not getting the best rates or the best products for their situation. Other people are getting great products and great things for their situation. But it's one of the benefits of going to a broker. You're able to have someone look at all of the lenders and just say which one has the right product and box that we can fit you into easily, give you a good rate and the perfect product based on your situation. So with that being said, here are the 5 things. Income is obviously a big one. The reason that the banks want to know what your income is they want to know, can you pay the debt back? They want their money back at the end of the day. And so things that they're looking for there is, how long have you been working there for? How long have you been working in the industry for? What was your last year's income? What was the year before's income? Are you making a salary, or is it more of a variable payment like commission or bonuses or hourly? They're going to want to know all of those details, and it's their right to know because this is going to prove to them that you have the means to pay them back. After all, this is a large sum of money, and it's not just anybody's money, it's that bank's money, and they want to make sure that they get it back. So income is a huge thing. A couple notes that I'll make on that is they want to see 2 years in that job, or at the very least in the industry. That's going to make it stronger of an application. They also obviously love salary jobs, but if you are commissioned or anything variable, what they'll do is they'll take a 2-year average of your income. Alright, so income, obviously with that then comes debts. They're very concerned about debts because then they're going, okay, well just because you make 100 grand, you owe 100 grand. So this doesn't make sense, or they're going to basically say, well, after all of your mandatory debts, and mandatory debts that they're looking at are things like credit cards, lines of credit, car payments, other mortgages, property taxes, and heat for some, as well is there any child support, alimony, things like that. Basically debts where if you did not pay them, there would be consequences. So owing your buddy money, not a big deal. Car insurance, not a big deal because at the end of the day you cannot pay car insurance. All that means is you can't drive on the road. But car payments, if you stop paying, they take the car away. Okay, so those are mandatory debts. Then what they do is they say, okay, these are your debts, this is your income, how much is left over? And can you afford a mortgage of the size that you're looking at? Okay, so those are very important. Probably the 2 most important. Next, they're looking at down payment. You cannot just pull money out of thin air. When it comes to down payment, they not only want to know how much of a down payment is it 5% of the home price, is it 10%, 20%, how much are you putting down? The more down payment, the stronger the application because the more skin in the game you have, so they feel more confident that you will in fact pay this debt back. But they also care about where is it coming from. If it's coming from your own pocket, they want to see 90 days of bank statements. If it's coming from the sale of a home, they're going to want to make sure that they know that that house was in fact sold. If it's coming from a family member, they want a gift letter saying, yes, I am gifting this to them and they do not have to pay it back. A down payment cannot be, you could use your line of credit to use as a down payment. The problem is now you have to go back to your debts category and say, can this debt be supported with this income? Okay, so down payment is important and they want to know not just how much, but where is it coming from. Then we've got credit. Credit's a big thing, okay? Credit is more of a window thing. So if you make 680 or above, if you make between 650 and 680, and if you make below 650 to say 610, and then below 610, those are the 4 main categories I'd say. When it comes to 680 or above, you can get a mortgage with anybody. Everybody will love you. If you have between 650 and 680, everybody will still love you. They just might not offer you all of their A-plus products, which means rates, prepayment options, things that go into a good product. And then if you're below 650, you're getting into more B lending. There's less lenders that will want to look at your file. They won't be as generous with the products that they're allowing you to have. And if you get really low, like below 610, most won't even look at you. For the couple that will look at you, they're going to want maybe lots of skin in the game. They're going to offer you a higher rate, things of that nature. So credit's very important. And that's something where if you want to know your own credit score, check out my other videos and I go through the process as to how you can pull it. And then the last one on my whole finger points here is property. This is the one that people forget about. They'll go to their bank or their mortgage broker and they'll get pre-approved and they'll say, woo, I can buy a $500,000 home. They'll go find a $500,000 home, take it to the bank, and the bank goes, declined. Reason being is because that property did not fit into their box. This needs to be recognized by everybody. The loan is not being given to you on good faith or because they think you're good for it. It's being given to you based on the home as security. So if that home does not fit within their guidelines, like maybe it's a single detached home, but it's a really small one, it's like under 1,000 square feet. There's some lenders that won't touch a home that small that's a detached home. If it's a previous grow operation or meth lab, if it is foreclosures, if it's on agricultural land, if it's just land, there's lots of things that go into basically what the banks are looking for. And in some cases they're going to want an appraisal to prove that the value is actually there. They don't always just go by the MLS listing. They might say, really, you think this piece of crap is worth 500 grand? Prove it. We're going to need an appraisal. So the property is very important to the mortgage application as well. So don't always think that just because you're pre-approved that you can buy any property that you want within that price range. So those are the 5 criteria. If you have any questions about your situation based on these criteria and you want me to either pre-approve you, which I can do right over the phone, it's not that complicated, and it's pretty quick. If you want me to pre-approve you, if you want me to give you my opinion of certain properties that you're looking at or how to strengthen your application, give me a call. I'm always happy to just review those things. It doesn't take that long to really strengthen your application, and I can tell you your options. So Leah Koss with the Mortgage Center. Hopefully I've helped you out, and hopefully I will be talking to you soon.